All right, there's one more company we got to talk about that just came out with its numbers, and that is Ford. Ford coming out missing analyst estimates here. The share's down 5%. Earnings per share from Ford at 39 cents versus the 47 cents that analysts had been anticipating here. And unsurprisingly, perhaps, the company's withdrawing its full-year guidance. That's because of what's been going on with the strike and the difficulty in predicting that. Of course, as we learned today, Ford and the United Auto Workers do have a tentative agreement. We don't know the full details of that yet. The UAW has released some of that, also among other things, talking about a 25% increase to pay for union workers over the next several years. But until that's ratified, because it's still subject to ratification, we don't know exactly the effect that's going to have on Ford. So withdrawing its forecast as we await that. So still looking through some of these numbers here, but that's what stands out to me out of the gate.
Yeah, that deal, I mean, listen, 25% pay hike over 4.5 years, 30% if you factor in the cost of living adjustments. How much that is going to cost Ford? You know, the team at Wells Fargo put pencil to paper. By their math, they think it's probably going to be about $2 billion. As you noted, though, Juliet, that deal still needs to be ratified by rank and file. Analysts I know think that could probably take 1 to 2 weeks, perhaps. And then, of course, also GM and Stellantis, those talks continue. Does a Ford deal sort of help a deal get done there as well? And if so, I mean, listen, you know Sean Fain is going to keep pushing them very hard. Wedbush analyst Dan Ives was betting that a deal between the union, GM, and Stellantis, he thinks likely gets done over the next week. We'll see.